Good morning, everybody. This is Mark. We're back here for the morning call. It is December 31st, 2012, New Year's Eve. Last day of the year, last day of 2012. Let us begin. So we're still in the last hour, 10th hour, as we always are, 11th hour. No fiscal cliff resolution yet. If it happens, it's obviously not going to happen the way I think most people want it to happen. It's just going to be a sort of Band-Aid plan if it happens in the 11th hour. And I believe there's a press conference at 11 o'clock. That could obviously change the tone of the market drastically accordingly, but we'll have to wait and see what happens. Technically now, for the last, I would say, almost week and a half, we've had a very bearish tone to the tape. It's been lethargic bearish. It hasn't been aggressive bearish, but certainly bearish. With the bids sort of just disappearing. I don't think a whole lot of new sellers coming in, but the bids are disappearing. There was, the one trade that I, looked great at the time, VIX, the VIX at cheap opportunities at 15. It's now at 21. Last night or Friday night, with the idea that there was actually going to be no resolution, the VIX itself, VXX, which has moved from lower part of 29, 28 to all the way to 35.50, actually rallied to 38.50 Friday, right after close, right after my call. Interesting. I think that's the level personally against 40 that is shortable. It's actually back down to 36 and change right now. We'll have to wait and see how that acts. Certainly, it's a tool you got to really look at if you really haven't looked at it. For the tools that I look at to see where money's getting put in, certainly, the spiders, the Qs, the IWMs, but the VIX, TLTs, TBTs gives me clues on what I should be looking at. So this morning, I am looking at the spiders, but they basically have rallied nicely pre-market, almost right at the same exact spot we started the day at 139, a little below 140. It's not really telling me a whole lot. Technically, it's not really showing me a whole lot. So I'm just going to watch and wait, and I think the headline news is really going to direct us accordingly. And that goes across the board with the Qs, which is now below the 200-day moving average, which I don't really love. But at the same time, you just got to respect the fact that now will be resistance 64.50, 64.64. And IWM, same type of idea. Not as beaten up as some of these other indices, but at the same time, a bunch of days down in a row. Maybe it finds some support around 81. We'll have to wait and see. If not, the 200-day is around 80, that it should hold, at least temporarily. New year, normally more money gets put to work. So that means, starting Wednesday, a rush of money could get put to work. That's been happening the last few years. Not sure if it's going to happen this year. It might be a little delayed for the fact of, the fiscal cliff talks and what actually happens in Washington. That just has to be on the back of the mind. I think eventually the market does pick up at some point in January. Just not sure if it's the first week or 2 or 3 weeks into it. We'll have to wait and see how the technicals sort of match up. Technically, not a whole lot for us to talk about. I'm seeing a little bit more bearish patterns. Doesn't mean necessarily I'm shorting. I'm not the guy that's going to be shorting 4, 5, 6, 7 days down. We're not quite oversold yet, but at the same time, I'm not putting new entry shorts from a swing perspective. Maybe there's obviously cash flow ideas we could take advantage of. Let's start with Apple for a second. Apple, I think it rallied a little bit pre-market, up a little bit. If I'm correct, I think 510, 511, 512 at this point in time. 516 to 518 is my level that it might get. If it gets above there, it will be breaking the descending channel. It keeps rising a little bit each day. Bearish on a macro sense, getting a little bit more bullish on a micro sense. So from a trade perspective, above 518 looks like an okay long, maybe to 530. And maybe it could trigger even a little bit further. It's Apple, so it sort of goes farther than you think. And if not, on the other side, on a macro sense, breaks 500, looks like it could go to 470. So keep those prices in mind for us to really take advantage of. Google still seems to be holding 700, but from a macro sense, nothing telling me it's ready to go up. It's just hovering right now in this range, and certainly could go lower, certainly could go higher. Really, I don't think it's a non-event trade for us at this point. Amazon, a bunch of days down in a row. Looks like it's going lower, but with 3 big days down, probably going to look for either rest or some upward movement, maybe to possibly be shortable. We're not sure right now. Same thing with most of the high beta now. Priceline, I could give you the same commentary. It seems to be holding 600, a move from 680, 670 all the way down to 600. Big gyrations. It seems like it needs more time on a macro sense to really figure out which way it wants to go. 600 seems like the line in the sand, at least right now, temporarily. The banks, the financials, holding in there, but you had some weakness on Friday. They seem like they're down a little bit this morning. I'm not sure if they're still down with the futures rising. It seems like the industry that is the go-to industry when we get some resolution in these talks. They are all hanging up there. FAS 110 probably buyable. Goldman Sachs, I said first time around 125 is buyable, but now it's not. It's probably the right price, but not the right time. Could get down to 123, 122. Might be a little bit more risk adverse in that respect. JP Morgan, same type of trade. Can't get the JP Morgan chart up. Yes, there we go. Against 4150, 4180, so it has a little bit more room of digestion. Wells Fargo, not as great. Bank of America, I want to see it hold 11, really, quite frankly. It had a good end-of-year push. See if it can hold 11 for a new entry. And, Citigroup, same type of trade. It's top third of its trading range. Really is just digesting after making new highs a few days ago. And that's what I expect. I expect against 38, that will probably be buyable for opportunities for us. From a possibly shorting opportunity, I don't talk about it often. I think it needs a little more digestion. ISRG breaks 575. It looks like it has some really more room to go down. Here's the weekly chart just so you can see what I'm talking about. Possibly 450 and possibly touches 200-day, which really has not been in a long time. Not for everybody, but something certainly to keep on the radar. Certainly been a little bit weaker than the rest of the overall market as we speak. Retail really has not found any footing in the last few weeks, a few days of the year. Under Armour hovering at 47, nothing exciting. Coors failed at 55. It's now at the lower end of its trading range. Again, 46 to 55 seems like the trading range. It should hold here against 45, at least temporarily. Lululemon, that's actually hanging up there relatively okay. See what happens. Nike, another one that I like, one of the best in breed. I'm only talking about the best in breed at this point in time based on what I see. And Nike, after a great earnings display, it split. It should hold 50, 49, might be buyable. That's one of the best looking charts, at least from a retail perspective out there. I really am not mentioning too much. I have not, the ags, not really a trade there on any of the, the AGU, the CF, MOS, not really anything that I like from a price point perspective. OIH, some of the oil commodity stocks, they have been weak and they've been grinding lower. Not my type of action, but a little more basing at the lower third of the trading range, and we get another whoosh down in this market. I think you're going to get some more downward action in the Schlumbergers, the Chevrons, the Exxons, which is now below its 200-day moving average, which again has not been below there in a few months. So 87.15 roughly is the 200-day. That will stand as at least some resistance temporarily. If you're looking to short, again, I do not short 3-4 days down, just like I try not to buy 3-4 days up. Certainly from a swing perspective, cash flow perspective, possibly opportunities for us. Facebook, we like to talk about it pretty consistently. 25, 24 seems like the buy area. I know it was upgraded this morning. Technically, seems like it needs more time. It's going to waver for a few days. I don't think it's going to be that exciting. But price-wise, 24, 25 was the level, is the level. I think you get involved, at least for the time being. We're still held hostage, guys. That's really the key. The market, I don't know how much resolution, if they do, prevent us from going over. I don't really know how that's going to the market's going to react. I think it's going to go up, but the problem is it's such a temporary plan, it's such a Band-Aid that, it could be a little bit different than we all think. So we'll have to wait and see. From that perspective, I don't think you need to anticipate. I think you can react, obviously, being the best in breed accordingly, either direction. Right now, I think the risk is to the short side after the move we just had. Gold, silver, trying to find some levels, bearish right now, but a few more days of basing in here, and gets above 162, becomes a little bit more bullish. Not really a trade for us. 160 seems to be a key price that there is some support, at least temporarily. and we'll go from there. So right now, guys, home builders also, I'll just mention that in the industry because it's obviously one of the best in breed for the year. Hanging in there, not much for us to talk about. A little more downward action. I think I'll be back involved with the Tolls, the Lens, the Rylands, and go from there. Last day of the year. It is a full day. It's not like Christmas where it's a half a day. It's going to be slow, I think, towards the end of the day. Either way, put some goals in mind. Start to do some real work outside of the markets to get yourself set up for 2013, because I do think 2013, just as 2012, there's going to be lots of opportunities, but you really have to be ready for it. You got to do your homework. You got to have your goals in mind, and you got to know, quite frankly, at the end of the day, where your sweet spot is, because this market is not rewarding anybody for just blindly buying, certainly not rewarding anybody for just blindly shorting. It's a very selective market, and you really have to time it pretty well. And that's what, as a trader, that's what you really try to hone in on. So keep doing the stuff you do well more. Try to get better at that. Stuff you do poorly, obviously move it up the curve a little bit, but at the same time, I focus on the stuff I do well and try to get better at that aspect of it. So it's going to be an interesting 2013. Today, I wouldn't take too much heed into the fact that we go over, we don't go over. Let the price action dictate what you're going to do. Either way, enjoy yourselves. It's been a long year. It's been a good year. And I'll be back at the end of the day for the last call for 2012. Good luck today.